This week on Case Studies with the Biz Doc, it's Square, the payments company that is now a full-blown financial services company, 12 years old, public on the stock market. I'm going to take you through the history, what's going on with the acquisition of Tidal. Music, what's up? Square. This week, I'm going to take you through the history, which has got a venture capital phase and a public phase, talk a little bit about their acquisitions. I'm not going to break Square all the way down, but I'm going to pull out some learnings that you and I can take from it, whether we're running you're about to hear it, a t-shirt company in Berlin or a startup here in the United States. Let's dive in. Square was born in St. Louis, Missouri, of all places, founded by Jack Dorsey. There were some other people involved, but he was the principal. St. Louis, Missouri in 2009. And during that time, as the history goes, they were coming in to introduce a simple financial product. It was the Square Reader. Remember the little reader that folks could plug into their phone? Like a limo driver or independent business people, consultants, swipe a credit card and trade money for a transaction with you and me. Maybe you're buying baseball cards from them. Maybe they're a simple entrepreneur. Maybe they're at the county fair selling t-shirts. It allowed the point of sale to be in the palm of their hand anywhere and everywhere. So they started there. Where'd they get their money? Well, it was traditional venture capital. They had a Series A, about $10 million in November of 2009 from Khosla Ventures, a premier, very environmentally focused venture capital firm, but also with a lot of finance and security investments. Then a $27 million Series B, remember A, B, C, that's the order of which you raise venture capital. That came from Sequoia, January of 11. So far everything's going along pretty typically. And then suddenly they pop a $100 million Series C in July of 11, led by Kleiner Perkins. Now you got Kleiner, Sequoia, Khosla, and Jack Dorsey. We all knew this was going to be something. It was going to be something big because these are the biggest of the VCs and are now putting 9 digits in play. They move forward, and in 2012, a Series D of $200 million from a cast of investors. So now you really see the company. The company is off and running, and it's moving, and you've got the Cash App has been introduced, and you also have the Square Reader. So now they're looking at, well, basically you're just a credit card processor, and you're taking a percentage. That was kind of what PayPal did. They allowed you to buy things on the internet, and they took a percent. Well, there was more to it, and as you'll see, Jack Dorsey was investing and acquiring companies. As a matter of fact, over the course of Square, from 2009 to date, they have actually acquired 19 different companies, culminating in the 2020. I think it was $50 million, wasn't it, Paul? They paid for Credit Karma?
50 million.
50 million, that's right. So now you've got Credit Karma acquired with Square. You're opening up a palette of small business and consumer. And when I say consumer, consumers like you and me that operate small businesses. So you have SMBs, like formal businesses with a storefront and things like that, offering retail services, the familiar Square point of sale, and also the ability to spin it around, you add a tip, sign your name with your finger. I mean, really slick system. But in addition, you still have mobility. As I said, limo drivers, people that have remote businesses. Matter of fact, over the weekend, the Biz Doc Babe and I went and saw some wonderful Stevie Ray Vaughan cover band here in Texas. And they were selling t-shirts for their band, and the woman there that represented the band, she had a Square Reader and she had a Square signature tab. So it was really, really kind of cool to still see that going on, knowing I was going to do the case study now. The point is, that's where it started, but with these acquisitions, a lot more happened. So here you go. They start Cash App in 2013. That was a big deal. That's where people like you and me could trade cash with one another, not just have to do almost like a credit card retail transaction. I could lend you $100. Then they announced Square Capital in 2014, and then an interesting thing happened between 13 and 14. See these here? This is the revenue numbers. Now I'm going to take a pause right now and run through the revenue numbers real quick, but they crossed $500 million in revenue. So that means they're suddenly doing $40 million a month, which is over $1 million a day. So suddenly this is a very, very real company. And if anybody doubted its ability to get trajectory and altitude in financial services industry, where everything is spelled with a billion, not million, financial services, it's all about the billions, not the millions. So All of a sudden, they're at 850, and they actually crossed the magic billion mark halfway between 14 and 15, and then toward the end of 15, no surprise, November of 2015, they have their IPO. Now, what's interesting, if you step back here, there's a little bit of controversy around the IPO that I'll talk about. So when you're raising venture capital, they put a valuation on your company that you mutually agree. Sometimes you can look at comps or comparatives of other companies that are out there. Sometimes you can't, and it's what the venture capitalists and you wrestle to determine the valuation of your company. Well, when they did that $200 million Series D, they had a valuation of $3 billion. So they are in the unicorn club 3 times, $3 billion. They then raised about $100 million in debt in early 14, I think it was. And then in October of 14, they raised $150 million in a Series Z. Now, there's an interesting thing here. Why would you raise $100 million in debt? Well, it all has to do with dilution, because that was a $6 billion valuation when they raised the last $150 million in the Series Z, which would be the last of the venture-funded phase for Square. Now, why should you wait and raise that? I think there's a small lesson here. Whenever you can extend the time from one financing round to the other, and your business is on a good trajectory, you are decreasing the percent of the business you're going to give up in the next round, meaning your business will be more valuable. And if you, let's say your business is worth $300 million, pick a big number, and somebody invests $100 million into it, the 300 plus a 100 is 400 million. So therefore, that 100 is 25%. So that investor or the group of investors would have 25% of it. Now you can roll this all the way down to make it 3 million. You took 1 million and they had 25%. The same principles apply. But the longer you can wait when you're developing your product and developing traction and developing customers and developing revenue, the better it is, so that you give up a less percent next time. And still people want to invest, especially if you're taking off. So delaying this a little bit meant that they were able to get from the $3 billion to the $6 billion valuation. Well, when the IPO came out shortly after that, there was a very interesting thing happen. Their valuation actually on the market slumped a little bit to about 2.6 million. And people were like, well, there you go, venture capital valuation there, that slumps down a little bit. Well, yeah, it did, but they were still working hard and adding things. The year they did the payroll, the year of 15, when they did the IPO, they added Square Payroll, and they also added support for chipped cards. In other words, cards that had the chip on them that now banking for security purposes and fraud control, fraud prevention, now required you and me to carry the chip card. We all remember we started getting mailed by the bank that says this card will no longer be accepted. You have to have the chip card. And then you would go in, and if you swiped your chip card, remember the person at the register would often say, oh, I'm sorry, that's a chip. You have to put it in. Well, all of that was there, and along with Square support for it. It says, then in 2016, shortly after the IPO, they announced that through the Square lending to small business banks and stuff, to small businesses as if they were a bank, they had lent over $1 billion of lending that was out there. So they also had $1.7 billion of revenue here. So let's follow it and follow this line, the stock line. As you can see, they had a time where they were, just kind of in this range, but it really took off recently, and let's go take a look at that. In 2016, $1.7 billion in revenue, then that's 16, and then 17, $2.2 billion with a loss of about 62 million. So suddenly now they're basically break even, because losing 62 million on 2.2 billion, whatever. It's not a big number. Then 2018, they had almost 3.3 billion in revenue, and they lost 36 million. Whatever. Not a big deal. They also announced the API. So in 2018, now you could take Square technology with the APIs and incorporate it into other solutions you're building. So not only are they now in the little reader that's on a phone, in a little POS system, now they're saying, hey, if you don't want our hardware, fine, incorporate Square technology through our API and developer support. That's a big deal. Take a look. From 18 to 19, they go from 3.3 to $4.7 billion. And they announced, oh, by the way, we made 375 million, 375, 380, something like that, in net income in 2019. Then 2020, nobody saw this company. COVID hit, didn't hit Square. Square attached itself to one of Elon Musk's rockets, apparently, and they went from 4.7 billion to almost 9.5 billion and a little under 300 million in net income. So now you're on a $10 billion trajectory and the stock suddenly rockets all the way up and you have a $100 billion market cap, and there is only one word for what has just happened here at the first quarter of 2021 to Square's valuation. That is damn. They are huge. Take a look at this. They got a $100 billion market cap, and I'm going to compare them to some of these financial services companies. And I know what you're thinking. What would Brooker think?
Hi, me again, Brooker. As you know, this week, Biz Doc is doing Square. And I'm here to remind you that not everything that starts small stays small. There are a lot of financial companies that wish Square stayed small. Back to the Biz Doc.
Well, that's what Brooker thinks, and let's take a look at some of these financial services companies. Amex, 118 billion market cap. So Square, about 90% of Amex. PayPal, 297. Square, 1/3 of PayPal. MasterCard, 358. Square, a little less than 1/3 of MasterCard. But now here's to what I like. Capital One, 58 billion market cap, Square 100, almost 2x. What's in your wallet? Pretty soon it's Square versus Capital One. Discover, remember the Discover card? Paul, do you still have a Discover card?
Never had one, Tom.
I never had one either, and I think a lot of people, somebody has them because they're worth $30 billion, but suddenly Square is more than 3 times Discover. So what you're seeing now is Square is suddenly, in the financial services industry, a player, P-L-A-Y-A-H, a player. They are driving, and they also cross 2 million total merchants that's on their platform. So now, something else happened here at the beginning. Say it's not just these numbers that were driving this. Let's take a look. 2 other things happened. They announced Square Financial Services, which was an in-house SMB bank. In other words, they are now in the state of Utah, have established themselves an FDIC, Federal Deposit Insurance Corp, which means backed by the U.S. government, that you are a real registered absolute bank. And so now they're going to offer more services in addition to all the things that they have, and Credit Karma that I already mentioned that they acquired here. All right, Biz Doc, Square is a big financial services company, but I don't want you to sound like a fanboy. I'm not a fanboy. I am impressed. I'm not purely a fanboy. I'm sure there's some cracks in here that an analyst could dive down and say where Square does and doesn't meet up. But I think there's some lessons for you and me that we can take through it. First lesson, I think, is master one thing at a time. It really feels like when I look over history with Square that they mastered one thing at a time. As a matter of fact, in 2012, the Square Reader, they were actually had another company had posted this video and analysis and said, oh, the Square Reader thing is not so secure. Square came out later and said, hey, wait a minute, I don't think that was fair. I don't think that's right. But they also increased the security. So the Square Reader got even better. So when you look at what was going on initially, it was the Square Reader, Square Point of Sale. Master one thing at a time, and I think Square absolutely did that. Then added Square Cash, Cash App, things like that. And as they move forward, I think it shows in the momentum of the company. Second, build versus buy. Remember, Jack Dorsey has bought 19 companies as CEO of Square. They've made 19 different acquisitions, some big, some small, and there's a really big one I'll get to in just a minute. So build versus buy, think speed, currency, and culture. Here's what I mean by that. We could almost do a whole case study on acquisitions. If you're going to buy something and you have the ability to do it, speed. Does it give you speed to market? It can't just be neat or cool. It has to give you speed to market when you're in the early stage. When you're a later stage, it has to give you at least the same profit per dollar of revenue that you get now. That's called accretive. So when you look at it, what are you getting? Are you buying revenue or are you buying speed? In the early stage or when you're developing like Square, usually what you're getting is speed. Then the next thing is currency. Well, what do you use to buy it? Well, take a look at what they were raising here. They had venture capital. Venture capital is the currency. They were able to cover their losses and actually buy other companies that would be a piece of the puzzle that would become the bigger Square. You and I can think the same way, and we don't have to be buying something for $100 million. We could buy, 3 guys making software, buy their little company maybe for $75,000 or $100,000. And maybe these 3 guys you bring into your company. Transactions like that happen all the time in the entrepreneurial community, and they don't have to be $100 million jumps. So build versus buy. Also culture. When you're going to buy things, think about the example I just did. culture. If you have 3 guys that were making software and they had a small business in your town and you were relying on them to make software for your company, it might be a smart thing to buy because also it's a small company culture, and now you're going to control what you're buying from them and you're not going to be reliant on them for service or speed or, gosh, the code itself if someone else bought them or they decide they don't want to do that anymore. So there's a lot of reasons to also look at the culture of size and see what would happen when you bring it in. And lastly, momentum kills. And I think that's what you're seeing right now. The momentum that they've got here is absolutely staggering. There's a couple other things that are hiding below the surface that people who have been watching Square understand as well. Square is very big on Bitcoin. Is it for transactions? Maybe. Is it an investment for Square? Maybe. As well as understand all the wonderful benefits of blockchain technology? The answer is yes to all of the above. So those acquisitions and everything are there. Now something just recently happened. Tidal. And Jay-Z, Mr. Sean Carter, will be joining the board of Square. But they say Tidal will operate independently. So what's going on there? Well, could it be that perhaps Square is going to be the exclusive transaction mechanism? Is it going to be that blockchain will come to music and streaming purchases? Maybe all of the above. Or maybe that there's just a strong interest that Jack Dorsey has in music. I don't think that's the answer, but I've seen articles written on that. I think that there is a deep thinking about the intersection of transactions, entertainment, specifically streaming music, and Jay-Z is an entrepreneur who is thinking forward, knows what he wants. Jack Dorsey, gosh, he's done this a few times, starting with Twitter. So I really think that there is something in there where music, transactions, Square's technology, and Bitcoin and blockchain are going to come together, and we're going to watch it unfold. Suffice to say, with a $100 billion market cap and now profitable, they've got the ability to do what they want to do. And these are the kind of transactions that maybe some of these other traditional financial services company couldn't pull off. Remember, the person doing it is Jack Dorsey, who is accepted to be the entrepreneur of entrepreneurs. There's a small group of people that you call the entrepreneurs of entrepreneurs, and Jack Dorsey is one of them. So he has the ability to do this where maybe if Amex was buying Tidal, people would be like, what are you doing? Well, when Jack Dorsey does it and says, well, I'm already in Bitcoin, I'm in blockchain, I think music is something that bonds people together. I think there's transactions in music, and I'm a transaction company. And as you can see, I've been unapologetic of what I'm doing, including adding things like Credit Karma that is not transaction-based, but is certainly another service. That's what I'm doing. It's all going to unfold and we're going to see it, but suffice to say, I think Square is now not only in a position among the top financial services companies, it is still innovating among these companies, not just solidifying its position to compete among the pack. Well, that's what I think about Square, but what do you think? Leave me a comment down below. I answer as many as I can. While you're there, subscribe and hit the bell and you'll get notifications of other great content from Valuetainment. If you like Square, by the way, check out this video, an old case study, which I'm sure you'll enjoy. Until next time, I'm Tom Ellsworth, the Biz Doc, and I hope I left you better than I found you.